In 2024, the New Zealand dollar's decline wasn't sudden. It was a culmination of 30 years of economic shifts. Understanding this journey is crucial for future economic planning. Let's explore the 30-year journey leading to this economic downfall. From modest trade deficits to a relentless expansion, each phase tells a story. A trade deficit occurs when a country's imports exceed its exports. While not inherently negative, persistent deficits can signal underlying economic issues. Trade deficits affect currency value by influencing investor confidence. A widening deficit often leads to currency depreciation as more money leaves the country than comes in. In the mid-1990s, New Zealand's economy was transitioning. Modest trade deficits began to appear as globalization increased imports of manufactured goods. By 2000, the trade deficit had grown to roughly 3% of GDP. Early concerns about competitiveness and reliance on foreign goods emerged. The early 2000s saw a global commodity boom. New Zealand benefited, but the surge in global demand also led to increased imports. The global financial crisis was a turning point. While exports took a hit, imports didn't decline proportionately, highlighting the fragility of the external balance. Despite steady export performance, persistent imbalances continued. Rising trade deficits in 2014 to 2015 were critical years. Global market volatility affected the New Zealand dollar. By 2020, the pandemic amplified existing vulnerabilities, leading to higher import costs. The COVID-19 pandemic impacted trade deficits. Investor sentiment and rapid depreciation of the New Zealand dollar marked these years. By 2025, the New Zealand dollar had declined against some major currencies. It was the inevitable outcome of persistent imbalances and structural vulnerabilities. Maintaining sustainable trade balances is crucial. Persistent deficits can undermine economic stability, as seen in New Zealand's experience. Diversification is critical for economic stability. A narrow export base can erode investor confidence and destabilize the currency. New Zealand can learn from past mistakes. Strategies for robust economic planning and reforms are essential for future stability. Adapting to global economic dynamics is crucial. By learning from history, we can safeguard the future of our nation's currency. Recap: we've explored the New Zealand dollar's decline, trade deficits, and lessons learned. Understanding these elements is vital for future economic planning. Takeaway: by maintaining sustainable trade balances and diversifying exports, New Zealand can ensure long-term economic stability. Call to action: let's commit to learning from history. Together, we can build a resilient economic future for New Zealand. Join us in advocating for strategic reforms and robust economic planning. Your involvement is crucial for safeguarding our nation's currency.